Welcome, crypto enthusiasts, to the Independent Reserve Podcast.
Underway for Independent Reserve Podcast number 8. Today's guest, Rob Waugh. How are you?
Thank you. I'm great today. Thank you for the invitation. Loving the new office. Much more space than the last one, I think. And it actually looks like a proper investment banking trading floor, so it's very cool.
Yeah, absolutely. JT, what do you reckon about the new office here?
Yeah, fantastic. Hopefully the audience likes it. We've got a purpose-built room for these podcasts and we're going to develop them. And Rob, you're our first guest in the new room, so thanks for coming along.
Very, very happy to be the first guest.
All right, let's do it. I've got to go through your CV, Rob, which is very impressive. Right now, CTO of CloudTech. But before that, NAB for 10 years. You did everything: wealth, retirement products, insurance, funds, everything, right? 10 years?
Yeah, everything on the financial institution side. So yeah, it was great time at NAB. Wouldn't change it for the world, but felt like the right time to leave.
All right, we're going to get into that. Standard Chartered before that, doing capital markets. But the most impressive thing of your CV, at least, is your first career before you were a banker, a PhD in particle physics.
Yes, that's right. That is right down at the bottom of my LinkedIn. Yes, it's true. A degree in physics, master's in particle physics, and then went on to do a PhD in particle physics at a particle accelerator. So
that's impressive. You don't slump your way through a PhD in particle physics. So first question, explain the Higgs boson particle to us like at 5.
Like your 5, I don't know whether I can do. So everything in the universe has mass except for the photon. So light does not have mass. And so everything else, like all of the fundamental particles that you can see, like electrons, and actually protons are not fundamental particles, they're made up of things called quarks. All of those things move through the universe like they're moving through treacle, and some of them are moving through thicker treacle than other particles. And so the Higgs boson is the treacle, and it kind of drags on massive particles more than it drags on light particles. So something like an electron is very light, so the treacle's very, very kind of fluid, but something like a top quark is very, very thick treacle. So you can think about the Higgs boson as different grades of treacle. Is that like on 5?
That is exceptional.
There's absolutely no way I could ask a sensible question to challenge any of that. So now we know something. JT, you got something for me? Because I can't.
No, but we definitely know that we're going to get very insightful and clever answers today. So really looking forward to this.
All right. Well, all right. So let's go with CloudTek. So you're now the CTO after leaving NAB. We've got to find out how you got there and what made you decide to leave banking to become a CTO at CloudTek.
Well, as you probably know, I was running the Stablecoin project at NAB, and so we had myself and Drew Bradford, who I think you both know, who's also left banking, had a kind of initiative, like a crypto blockchain initiative. We had a lot of high hopes. We had some kind of structured products and Bitcoin linked products, and we went to the board and kind of presented a bunch of stuff, and we came back and started the Stablecoin product. Stablecoin desk. And during that period, obviously, I reached out to a number of crypto and Web3 businesses around Australia. One of them, CloudTek. And then, towards the end of my time at NAB, CloudTek came to me and said, "What the hell are you doing this at a bank for? You should come and do a Web3 crypto business." And so I met the founder, was super impressed. And then, interestingly enough, one of the employees of CloudTek was an old colleague of mine from NAB. We covered China together for about 5 years between 2013 and 2018. And so she just called me up and she said, let's get the gang back together. So that was it. And so I went and joined.
And that was November or so last year. You left the bank to do that?
November the 7th, I think, was my last day.
Right. So sort of 7-ish months or so in your job. What do you make of it all so far?
It's, I'm really not missing governance and risk committees, which were a considerable proportion of my job, particularly trying to bring a new product to market, particularly a product that's kind of crypto and blockchain related at the bank. And so there's no governance and risk committees needed to kind of educate people before they can kind of start making decisions, because everybody's kind of naturally understands crypto and blockchain. And so that was like the first thing. The second thing is the uniform's very different, although I've not quite got the memo yet. And I have bought some Jordans, and I do wear them occasionally, but most of the time I'm still in my suit.
Well, it's definitely two firsts, because you're the first particle physics scientist we've had on, and the first person to wear a suit. So,
is this the first suit? I did take my tie off. Was that enough?
And we've had a number of lawyers on, so it's very well worn.
So so I guess interested in sort of your journey of what sort of piqued initially, I guess, your interest in crypto as an industry, and sort of what was it that kind of made you think, okay, this is the future. This is where I'm going to sort of focus my time in effectively your third iteration in your career, I guess.
Yeah. So, like, if going back to the origin story, I was living in Hong Kong, and we just had our second child. And if either of you have got children, you don't really have a great deal of a social life in the first 6 to 12 months. And so I was just sitting at home, and somebody sent me the Satoshi paper, the Bitcoin white paper. And so I was reading through it, and quite obviously, because of my previous career as an academic researcher, it was intellectual curiosity. I was like, oh, this is. And I knew a little bit about cryptography. Did not a massive amount, enough about cryptography, but it was this kind of marriage between cryptography and macroeconomics and game theory. I knew a bit about game theory. Obviously, I knew a lot about macroeconomics, because at that point I'd been on a trading floor for like 12 years. We'd just been through the GFC, which had taught me some incredibly interesting lessons about the nature of money and the nature of risk. And so I just started reading the Satoshi paper, and it went from there, really. And, read the paper, built a mining rig in my spare bedroom at home, until my wife saw the electricity bills and was like, what WTF? And so that was, 2011, 12, 13, started mining.
So you're mining some Bitcoin in 2011 with your own rigs?
Yeah, it was pretty easy, 50 coins a block.
How many did you keep?
I kept sufficient coins, and the rest I sold and bought my house in the eastern suburbs.
How good.
What a story.
That's a cracking story.
Cracking.
So yeah, cha-ching, thank you very much.
And we move, almost a decade on, or just past a decade on in time, from the original white paper read to now. What excites you most about the opportunity in the industry?
So it's back to the first thing was obviously EVM and smart contracts. That was like a light bulb moment. I was like, oh shit, I should have thought about that. Because they had, like, in the late 90s and stuff, and when I first got to the trading floor, they had, this kind of Ricardian language about smart contracts for derivatives. It didn't really go anywhere. And so the smart contracts was like, aha, especially if anybody's ever worked on a trading floor and had any operational issues, so trades gone wrong or trades gone, mis-entered, how manual much of the back end systems are for banks. And you realize, actually, if you have this smart contract language, you can actually embed the business logic and business flow directly into the core logic of the transactions you're doing. And so that was a bit of an aha moment. And so I thought, look, there is scope for other layer ones other than the Bitcoin. I wouldn't say I was a maxi, but I was very much there needs to be something monumentally advantageous about other L1s to kind of go. And so I was really interested in that as stablecoins. And then I think the really interesting thing about at the moment is that people are developing L2s for Bitcoin, like stacks, and there's other kind of protocols. That's super interesting because I don't know, like, did you want to talk about how macroeconomics and banking is going to be revolutionised in the next 10 years?
Yeah,
it might be too early in the podcast.
No,
you want to do that?
You did mention earlier in one of the things that, out of curiosity, that led you to the white paper was that questioning the nature of money itself, which is kind of really fundamental to a lot of the value that people see.
Yeah,
in
like
Bitcoin.
M1, M2, and M4.
Yeah, so even if we could start there, this is great.
So the nature of moneyness, like how much is something is close to money, was super evident that what people thought was money during the GFC was not actually money, or that money kind of evaporated how that happens. And so during that period, I did start to go back to fundamentals. I said, who actually creates money in the economy? So that was one of the first questions that I went to, and then I realized that actually money is created by commercial banks. It's not created by central banks. It's created by commercial banks making loans, and those loans being deposited in bank accounts, and then, hey presto, it's money. And particularly as a physicist, where you have all of these conservation laws where things just can't be magically created out of nowhere or destroyed, you're like, that's how money's created. And then I realized it was actually money is, certainly in that sense, money is just a liability of a commercial bank. When you say, how much money have you got in your bank account? Well, it's not really money. It's a liability on a commercial bank. And so that was kind of my first education, because Bitcoin was essentially, you could say, well, that's actually money because it's not the liability of anybody. It's merely a ledger of something that's incredibly hard to create, that's limited in supply, that people can agree that they should have, this is the medium of exchange. Now, that actually wasn't the end of the story for me, because if you go back and look at history of kind of monetary and expansion monetary policy, during the Enlightenment period, they realized that they needed fractional reserve banking as a shock absorber to the growth and recessions of normal industrial economies. And so actually fiat money plays the role of a shock absorber, and actually at the time it was with gold sitting in the bank's vault. So gold would be there, and then these fractional notes would be created on top. And you look at that historic analogy, and it doesn't require a particle physicist to then say, actually, the future of banking is banks sitting on unencumbered tier 1 equity, which is Bitcoin, and then a layer 2 on top of that, which is fractional money that is then secured against the credit losses of that fractional loan, and deposit money is then secured against the tier 1 equity of Bitcoin. And so that's how I think banking is going to be in 10 years' time. Sorry, is that
no? That is not
too academic.
No, not at all. That's excellent.
Is that what you want?
Well, that kind of taps into some of the views. I know Michael Saylor has expressed similar views that Bitcoin is thermodynamically sound money. And I guess that kind of taps in a bit of what you're saying.
Although nothing's thermodynamically sound, right? We're all going to die in the eventual heat death of the universe. But yeah, let's skip over that one.
Okay, well,
Even Bitcoin,
I guess nothing's going to last forever.
Yeah.
Do you is that kind of the sort of view you're taking, that you've got this money that is hard money because it is such a hard asset in that regard?
It's the hardest strata and substrate for which you can then tether your shock absorbers for the rest of the economy. Because money, I think money still needs to be created on top of a monetary strata, or should we say a base strata, such as Bitcoin or gold. And the reason for that is that you look at the historical, when gold was used as money, you had to wait for gold reserves to be discovered for the monetary base to expand and then cause economic growth. And the counter could be like if there was actually not enough gold in the economy, it would cause recessions because the velocity of the gold wasn't sufficient. And you just look at the historical and you're like, actually, Bitcoin or a limited supply monetary substrate is actually not sufficient. There needs to be some dynamics on top of that. And so, which is why I'm not a maxi. Okay. I think that's probably, so that's why I'm not a maxi. So there's some dynamic equilibrium of that state that is going to be the future, which is what I want to build at CloudTek. That's our ambition, is to build, the future of banking on chain.
And what do those steps look like? We're a long way away from Bitcoin being, tier one capital for
banks.
commercial banks.
Not too long though.
What are the if we can break this down?
It.
If we can break this down, and you're absolutely right. They're holding this in their own sovereign wealth funds and on their own country balance sheets. What are those steps? What does the timeline and the pipeline look like to be able to achieve that?
Yeah, so you need the exchanges, for which you're a great example in Australia. There's probably some regulatory development on the exchanges that the centralized exchanges needs to happen. Not necessarily because anybody's running any risk. It just kind of reassures kind of grey-suited regulators and civil servants, and that's coming, as you know, right. That's coming down the pipeline, and I think that will reassure politicians and the government agencies that everything is kind of working properly and that customers are being protected, which I think we all want. And so the exchange is going to be part of it, but not just for kind of Bitcoin, because obviously with smart contracts and tokenization, you can tokenize anything. And I'm sure this is part of your strategy. They'll tokenize real estate, they'll tokenize equity, they'll tokenize bonds, they'll tokenize short-term interest rates, they'll tokenize derivatives, they'll tokenize commodities. And everything that used to be on these islands of centralized databases is going to be freed and be in this kind of decentralized network, which can be then traded freely on exchanges. So the exchanges is kind of one aspect. The second one, as a former banker, I would call this like treasury operations, but crypto and Web3 people call that stablecoins. And so that multi-currency stablecoin, which also, if you have multi-currency, essentially you get spot FX as well. And then you have stablecoin staking, but essentially that's STIRT, right? Short-term interest rate trading. And so all of that I would call is like a treasury operation, which is what I was brought into CloudTek to build. The third aspect is you need some value-added qualified custodian to segregate exchange and custody relationships, which is the third thing. And CloudTek's got some plans around that. And then the final one is an asset management business where people who originate assets into either a fund or for investment, they need to start originating things natively in tokenized format. And so those four elements, with the customer at the center of it, with on-chain identity, sovereign identity managed by the customer themselves, that is what I would describe as the future of financial services.
Mm. Fascinating. And so I imagine when you're talking to people in crypto and Web3 and everything like that, speaking in that kind of language, it's kind of, I guess everyone kind of gets it. Everyone kind of goes, yeah, I can see how that works. But when you're speaking to people, say outside of crypto, outside of people who get how the technology works, what are the kind of conversations you're having, and what are the kind of the challenges you're having to overcome, sort of maybe some of the preconceptions?
I think there's still a massive lack of understanding and knowledge about a lot of crypto. I still have conversations with people about Bitcoin, and people say, "Oh yeah, what if they just decide to print another 21 million?" And so there's clearly a lot of educational work that still needs to go into the system for people to kind of understand the dynamics and the equilibrium of how the system works. And so that's essential. And then that doesn't just go for our eventual end users and end customers, but I think even government agencies, there's some of that. And so that's certainly something we can do. I think also there's some of us that realize that regulation is inevitable. There's no way that we're going to get away from it, and neither should we. And so I think there's going to be two camps emerge in crypto and Web3, with those of us like us, I think, who are like, no, this is it. There's legitimate institutionalization and regulation is good for the industry, and those people who really would just like, no, that's not the crypto ethos. I don't know how you get this, like, it's not the crypto ethos, but it's but I don't think they're going to be able to operate in OECD countries. And sure, they'll go and choose to do whatever they want. So those two things, education and regulation, I think is still required to an extent.
I guess to some extent, a lot of people don't know how the internet works to necessarily know that they like to use the internet to surf whatever. And crypto, to a large point, is once enough people just kind of do it, build it, it gets blended in everyday life. It won't really matter whether they believe it or not, because they'll just want to use it because it works, right? But to the extent you can share, I guess, for the people who do matter and the people who are drafting the regulations, or the people who in the banks and the likes that are making the decisions about implementing the technology, like where's the maybe the education gap, or the education gap, or what obstacles do they need to overcome to go, I'm on board with this?
So obviously when I was at NAB, we had to, there was a smorgasbord of policies and regulations that I had to get changed to do something in crypto, although stable coins off the bank's balance sheet is not exactly crypto, is it? I did have to buy some Ethereum to mint to kind of push some gas.
Pay some gas fees.
Yeah, that was an interesting. Maybe we can talk about that. Was an interesting story about how do we know where the gas is going. So we changed a bunch of policies, particularly around AML and CTF, and no criticism of these people in risk. They're not, they'd never had any exposure to blockchain and crypto, and so there was a lot of this perspective that everything was anonymous. Like when they say cryptography, they think it was all about I suppose the equivalent of like the Tor network, right? That everything is end to end encrypted. Nobody knows who anybody is or what anybody is saying, but it's clearly not. It's a public permissionless blockchain where anybody can download the entire blockchain and look at every single transaction. And if you have worked out that this wallet is this exchange and this wallet is this person, you have total transparency.
Absolutely.
And more so, I might add, than the movement of cash or fiat in correspondence banking networks across borders. And they realized that. And then as soon as they realized, they pivoted, and then they said, but then why would our customers want their transactions publicly available? So there was this kind of moment where they were in mid-pivot, that they were happy, and then they were worried about kind of privacy concerns. And so it was tremendously interesting process of them going through the learnings of learning about crypto. So that was my experience of changing policy at the bank.
Yeah, right. I mean, it does seem, there's this kind of joke going on that, regulation's always 18 months away. That's what we said 18 months ago, and now we're saying 18 months, but there's definitely progress, even at the banks, I'm sure. There's a lot of progress, a lot more people now are getting it. It seems like something's going to happen. It's just a matter of time.
Yeah.
More so than...
Yeah, not naming any names, but one bank went early.
Yeah.
And, being early is the same. You guys are traders. Being early is the same as being wrong.
Yeah.
Two banks went together and then got vertigo.
Okay.
And then the fourth bank was like, oh, I've got other problems to deal with, and I'm gonna move when the regulations are in place. And so, I've been in banking long enough to know that there's going to be a bull market. People are going to build meaningful customer solutions to deliver customer value. And these startups over the next, 24 to 36 months are going to start disintermediating the banks from some of their core profitable business. And at the end of 2 to 3 years, the banks are going to say, why didn't we do that? Why did we get vertigo? Okay, let's take the checkbook out and go and make some major acquisitions and pay overs for it. And I just wanted to be on the other side of that trade.
Yeah.
And I've heard this song on the dance floor a few times with banking. And there was a lot of Web 2 stuff that they got involved in as well. And so so we've got 2 to 3 years before we all getting acquired by large institutions with the large amounts of goodwill on the balance sheet, so they can kind of make acquisitions. And that's my prediction.
Yeah.
And we've seen that in recent history, just in retail foreign exchange. where
Yeah.
the competition became quite immense.
Yeah, wise and stuff like this.
Exactly, and there's naturally a period of consolidation and picking up market share and then bringing that under a more central umbrella and try to cross-sell and monetize those individual customers with different banking services and different asset writing, which all stems from providing FX solution at the very front end. Can absolutely see that happening with crypto products and crypto-related services. I'm interested. At the moment, it's very much like people either have defined experience that sits within banking, or they have defined experience which sits in technology and cryptocurrencies. But the left hand and the right hand aren't exactly seeing. They're not working together to be able to achieve something. Is there going to be? Do you think there's going to be a place where the banks will sit there and just look to bring in crypto-specific staff at all, or do you think that time has now passed?
Yeah, I think when we initially made our proposal up at the top, the wise men of the bank, one of the proposals was we want to do this not necessarily because we think we're going to build massive businesses with huge revenue lines within the next 2 or 3 years, but because the organization needs to go. If you go to the gym, you need to lift weights to exercise certain muscles, and if there's no muscles in that area, such as blockchain or smart contracts, we need to kind of start with light weights and kind of get bigger and bigger and bigger, and that was a real push within NAB. Unfortunately, like all of us left, and so I don't know what they're going to do now. But they probably will. They will at some point have to bring that knowledge base inside. I think they'll do it through acquisitions. I don't think they'll go and start bid away our Solidity devs, right? I think that they wouldn't know what to do with them. That's fundamentally the case. They just wouldn't know how to use them or utilize them properly. So I think they'll just acquire us and acquire the staff as well. Just means it's massive golden parachutes for us, but it's fine.
Good problem to have if you're on the outside. I've always thought that it's very logical to have tokenized repo, and that's probably the first step for me.
Repo's still fax machines.
Right?
Yeah. Isn't like, can you believe it? In 2024, repo is still fax.
And definitely need to have some sort of security mechanism just in case the internet goes down. But for 99.9% of 3 standard deviations of what a day looks like, having tokenized repo, I think just logically makes sense, and it's a very easy in for the major commercial banks and the central bank to sit there and think about what tokenization of assets might look like. The next iteration for me would be smart contracts in fixed income securities, and making sure that payment schedules get coded in and correctly allocated to those people that have purchased fixed income products. I like the story of being able to get to tier 1 capital as a Bitcoin. I've never thought about this. My personal challenge at the moment is to understand how we get Bitcoin to become a yielding product as it increases in value. If we think about fundamentals or building blocks that society's based on that form the fundamentals of currency outside of the fiat system, for me, residential real estate is one of those big ones, particularly around the world. And I can absolutely see where you're coming from for Bitcoin. If we had $1 million Bitcoin, how do we get yield on that, and how do we sort of PV cash flows associated with it to get to a value?
That is the $64 billion question. So there are some use cases. Like the most obvious use case is the 10-minute delay per block, where you have some layer 2 solutions where people are essentially taking short-term credit risk to settle transactions like the Lightning Network or Stacks or whatever. And so clearly that's a kind of a yield play. I think there's other yield plays around insurance, particularly for custody, where custodians at the moment are eventually they're going to find it very, very difficult to find reinsurance for cyber risk. Impossible, in fact. And there just won't be enough reinsurance capacity, and the Bitcoin market cap is just going to be too big for any, for reinsurance capital to kind of like take that cyber risk. So it feels as if there's some kind of Bitcoin smart contract staking solutions around reinsuring cyber hacks and people either losing keys or getting hacked. That feels like there's something there. So there are things that, but this is the great thing. Nobody's invented them yet, right? And so it's like it feels like the first person ever to do like a weather derivative. I don't know what that was, maybe 1980s or something. Or the first interest rate swap, and we are at that point in the cycle. And if that doesn't make you excited when you wake up in the morning, I don't know what would.
Still very early.
It's still very early, and I think that's it's something I always keep coming back to. People will say, "Oh, well, how come with crypto and blockchain I can't do X, Y, Z right now?" It's kind of like, well, we're kind of like where the internet was in the late 90s. You know what I mean?
You could lend it.
Yeah, and it's the trajectory is what we really got to keep coming back to here.
You could lend it. It's very easy to lend, but you got to. This is the funny thing about lending is like I could lend you a Bitcoin, and I could charge you an interest rate of Bitcoin, so I could lend you 1 Bitcoin at the end of a year. I would want 1.1 Bitcoin back. Fundamentally, if that goes wrong, I'm still gonna like work out my contract with you in the Australian courts, right? And so it's coming back to the point earlier on is like there's no way you can absolve yourself from regulation, because if push comes to shove, particularly on some contractual terms around on top of layer ones, you'll need to work it out in a court. And if you want to work it out in a court, you will at least need to have been regulated. And so I think there are solutions to Bitcoin lending, and I've been sniffing around a few, but nothing that's kind of stuck just yet.
Yeah, but see, you've been in crypto now for say 7 months. I guess I'd be interested to sort of see what your initial views, from an industry, like just in terms of the maturity of the industry so far. We talked just before about the trajectory. I know we're still very early, but what's sort of been your impression in terms of the maturity and the types of businesses you've seen so far?
It's a huge range. We had discussions within the bank about, we're not going to bank the whole sector, but there probably is parts of the sector that we should consider banking. And so there's clearly like a real range of maturities around kind of building out the businesses. I think going to some of the Oz DeFi meetings, which I think you guys go to as well, always amazed by some great ideas, technology, or technological implementation of ideas is like second to none in comparison to what it was like delivering technology projects within a bank. It's just night and day. And so, but the problem is that they focus entirely on the technology and don't really have an appreciation for, well, what terms and conditions should that have, and what does that mean for kind of privacy, and how does one engage with customers, and are there any customer rights around this?
And this is just a bit of a side conversation. Like, I guess the way I think about the Bitcoin earning yield is like Bitcoin's just going to be a thing, and then everything else like discounts around it. So
right.
So
that's interesting. So my view is that you'll have Bitcoin as a tier 1, which doesn't earn any income.
Yeah.
But what happens is you have a stable coin effectively on the top, which is either a stable coin or a stable loan. It's like one or the other things. It's like the two sides of the double entry bookkeeping, and both of those will have interest on.
Yes, exactly.
And they're also, and if you think about it, there's also always a price which is what is somebody willing to sell a Bitcoin for those fiat tokens? They'll always be. So if you have loans earning interest and transactional accounts generating income for the people who have transactional accounts, the margin, the difference between the NIM essentially between the two, should get distributed to the owners of the tier 1 equity in the same way that it does in a bank now.
Yeah.
And so that's how Bitcoin will earn a yield.
Yeah.
And then there'll be a decision about will say, do I want to keep it as, stablecoin money to spend it in the economy because I'm earning money on my Bitcoin? Or do I want to convert it to Bitcoin and stake it in a new bank or whatever? And that's how. And so that dynamics, and I have actually started writing out all of the stochastic control theory and the differential calculus around all of this. And so that is super, super interesting. And that's what I want to build.
Yeah,
and I was never going to be able to do that at NAB.
That's incredible. That is so cool. That's really cool. It really is cool.
Yeah.
It's it's so often, this is the thing, right? So often, I mean, that bit aside, like just in terms of like the industry itself, you get these people and they're going, oh, regulation's coming, I'll get a bank account. And it's like, no, you're not going to get a bank account just because you're regulated.
Yeah.
You still got to run a proper business. You still got to have everything sorted out. Still got to have your terms and conditions. You still got to follow common law. There's plenty of things, right?
There's no way around it.
There's no way around that.
You're still operating with humans for now, and those humans are in jurisdictions. And whether you like it or not, the jurisdictions have some say on how things are carried out.
Yeah, exactly.
There's no way around it.
And so those avenues, the different avenues of the business that you're looking at the moment, what excites you the most?
Yeah, so at the moment it's the stablecoin business that we're building out, and there's a lot of regulatory clarity coming on stablecoins, in the next year or so, and so it's going to be an awesome time to be in that business. And so we're looking at an Aussie dollar stablecoin, which is, I think, going to present great opportunity for people, even like, Web3 and crypto native people who currently have to use a US dollar stablecoin for their treasury position. That's just going to take, FX or currency risk off the table because they can hold their, treasury positions in Aussie dollar. I think it's going to present incredible remittance opportunities, and it was something you said earlier on actually. So I think the remittance in and out in Australia is 64 billion a year, which is quite large, and obviously Wise and a couple of the other providers are like attacking that. The funny thing is that stablecoins can attack that as well if you have multi-currency stablecoins, and it doesn't even go through the banking system or goes through some wormhole like the Ethereum mainnet wormhole through the banking system. But the biggest thing is, so the Australian superannuation system is 3.9 trillion now. 20% of it is in foreign assets, maybe 25% of it in foreign. So there's $1 trillion of foreign assets. Maybe half of that, 500 billion, is equity, US equity. There's two things to know about US equity. Firstly, that's 5 to 8% dividend yield a year from US equity. And did you know how long the company's paying the dividend, pay it into the clearance system. It takes 6 weeks for it to come out of the clearance system and then get distributed dividends to the stock owners. 6 weeks.
Yeah.
And then you ask them why, and they go, we need to validate the fact that everybody who on the ex-div date, everybody who owned the stock really had the stock, and there's some complications because some of it's owned through funds and stuff like that. Total nonsense. Total nonsense.
6 weeks of interest.
Mate, it's 6 weeks of interest. And so there's revolutionary things, disruptive things that you can do, not on, person-to-person remittance payments, but like fundamental institutional use cases that I think are going to be very disruptive of traditional banking. And and they'll realize that. And then in 2 to 3 years' time, it's going to be super interesting about how they're going to react to it.
And the interesting thing for Australia is, the commodity flow is denominated in US dollars.
US dollars, yeah.
So stable coins that can talk to each other, and potentially an FX forward market which gets built out through a stablecoin market, or whatever that may look like. That is a derivatives
Cautiously
market.
And within the regulatory rules.
Absolutely, this is very, very forward-looking. It will be interesting, how people pick up that commodity flow. That commodity flow, particularly for Australia, and the link to the rest of the world is the enormity of the opportunity.
Well, our 3 major commodity trading partners are China, Korea, and India, right? I think Indonesia might be 4th. So there's all of the iron ore flow out and the coal flow out, and so those markets are all done on the spot market, which, as you know, is for spots like 2-day settlement. There's no reason why it needs to be 2-day settlement, and so the commodity markets as well and the remittance is in because it's actually students coming in and the money going out, and it's just the balance equation of having a spot stablecoin market for the flows in and out. It flows in and out, and then you just need on ramps and off ramps in the various jurisdictions for your stablecoin, and you're done. It's having done it at NAB. I worked out all of the things I needed to avoid, and so now it's probably going to take me 4 or 5 months to do it at CloudTek, whereas it took 18 months at NAB, and I cannot describe how much cheaper it's cost me to do it at CloudTek in comparison to what it was in an institutional bank. Well, you're at a tech business. It's so much cheaper to do it outside.
Well, Rob, you've got a couple of years before I guess the banks start interesting. Could maybe just run us through, I guess, the strategy for CloudTek and everything you're going to do over that?
Yeah. So first point of order is launch and scale the stablecoin business. Aussie dollar is obviously the first one we're going to do. We're looking at what's the next currency. We did it on Ethereum first. Probably do it. We'll probably think about doing it on a couple of other L1s as well. Aussie dollar to start with. I think Kiwi will probably do New Zealand dollar because there's so much trans-Tasman flow that we want to have a look at. But then it's like, what currency do you do then? I still think the US dollar stablecoins have got some volatility, and I know it's a very crowded market, but I still think there's opportunity bringing another US dollar stablecoin in that market. And then Japanese yen. Yen rates are off the floor, heading northwards. And so actually there would be a value proposition of providing a Japanese yen stablecoin as well that doesn't cost you money. So yen's, in our mind as well, other currencies. And so stablecoin is the first thing we're going to do, and then all of the spot effects and stuff around that. We are building out our custody business. We actually do have a custody license within CloudTek, and so the changes in the qualified custodian regulations in Australia are very interesting to us. So we're kind of building and playing into that to be a qualified custodian for digital assets in Australia. Our asset management business, we're looking at some very short-dated credit tokenization solutions to originate, real-world asset origination into our business, for which we can provide custody and we can provide a stablecoin for delivery versus payment. And then looking for exchange partners. We do have a small exchange, Cobweb Pay, within our group as well. And so that's the focus for the next 2 or 3 years. Build out those businesses, and looking for partners to collaborate. It is a decentralized network where we all partner. So we're very interested in working with you guys as well and sharing some ideas. And so I think that's what I'm going to be focused on. I'm doing a lot more technology than I thought I was. technology. I knew I was going to do a lot of regulatory work because that's just the nature of it. But yeah, we've got a lot more technology build stuff to do, which is exciting. It's back to my original career. Actually, when I was a particle physicist, we built this thing called grid computing, which you would call cloud computing now, and doing processing the signals out of the particle detectors. And so that was actually my first career, was like kind of a science and technology job, and it is interesting on the third act of my career that I'm kind of coming back to that.
I really wanted to come back to the science. So you've got 3 careers now.
Yeah.
Particle scientist, banker, and crypto guy.
And DJ.
A DJ. Oh,
Did I not tell you that?
No, you did not.
No.
Yeah. So I've been during COVID. My wife was like just the most amazing person ever, and bought me some decks for my birthday. And because I've always had a keen interest in house music since the early 90s. And so she bought me these decks, and so they sit on our kitchen worktop at home. And then I come home and I plug my laptop in, and I've been learning how to DJ over the past 4 years.
How do we get our hands on some samples?
Awesome.
I've got a SoundCloud. Did you want me to share you?
Absolutely.
SoundCloud, yeah.
We could actually. We could actually. I know I've only got 5 minutes, and so I'm wondering if the end of the podcast we can then go out on one of my SoundCloud.
Perfect.
We can absolutely work it in.
Yeah.
Yeah.
Before we get there, how do people get in touch if they want to contact you and collaborate?
I'm actually, being from a regulated bank, I've never been on X or had any of that stuff. I should actually really kind of build that out now that I should have a public profile. But you can get hold of me at CloudTek, obviously, and so info@cloudtekgroup.com.au, and yeah, I'm probably on LinkedIn as well. I'm definitely on LinkedIn. So here you go. Here's.
Yeah. Can you make it louder? All right. The Rob Waugh original.
There we go. So that's me DJ. Is that what you wanted to finish on?
That's awesome. Thanks, Rob.
Independent Reserve, the trusted cryptocurrency exchange.